Thank you, Mark, and a big hello from London. There have been fewer technical patterns this past week than in recent times, but the ones that have happened have been quite interesting. In the currencies, there was just the one. A weekly key reversal up last week in euro against the Swedish krona, and then only just. However, the pattern has had a nice follow-on higher through this week, with about a 1.7% move up in only the past 2 and a bit days. I suspect in part this was due to the proximity of the rising long moving average below, currently at 1150.35, that acted as a barrier on the recent attempts to try and go lower. In the equity and stock markets, we had an interesting pair. A weekly key reversal down last week in the UK FTSE Futures, which has seen a small, limited move lower that seemingly ran out of steam once it tested the twin 50% Fibonacci levels below of the July 2021 to February 2023 move at 73.77 and the October 2022 to February 2023 move at 73.67. Now, once prices reached down that far, they turned straight back up, and we're at or near to last Friday's close right now. Then we had a weekly key reversal down in the Dow Jones Stock Index last week, a move that punched down below the flatlining long moving average, currently at 33.829. Now, we did have a follow-through lower on Monday this week, but it was halted at the same congestion in the 33,000 zone that we saw at the beginning of October. And I suspect this is also related to the support seen throughout the month of May this year. Here too we are near to Friday's close right now. We had one weekly key reversal pattern in fixed income markets, and that was in the Osaka JGB Futures, the Japanese government bond, last week with a weekly key reversal down, but it was only just. Now, we have seen a follow-through lower here on Monday this week and at the start of Tuesday, but since then, well, the market has recovered back up above Friday's close. However, here again, the market was indecisive and not really moved away from last Friday's close and stayed close just underneath it, last Friday's close actually right now. In the commodities, we had a weekly key reversal down in Winnipeg Canola Futures last week. Here we saw a follow-through lower this week in what was or has obviously been a recent bearish market, as anyone who follows my video commentary on canola last Thursday will easily understand and see. However, we did have a little hesitation yesterday with an indecisive spinning top pattern and a reactionary, though not very energetic and limited, pullback up today. Nevertheless, we are still below some significant resistances overhead, notably a neckline, which is colored in purple on my daily chart, from the April to June reverse head and shoulders bottom pattern, and that's currently at 703.40, plus the recent 50% overhead Fibonacci line at 729.40. Both these must weigh upon the market. For reference, there was no similar patterns in any of the other oilseeds or vegetable oils that I cover. Finally, we had a weekly key reversal up in the Baltic Panamax index last week. This has seen a small follow-on higher this week, but we are not far from significant overhead resistances at the September and late April highs in the 1700 area. So I urge caution. However, I do note the possibility of an imminent golden cross, potentially formed by the crossing of the rising medium moving average, currently at 1336, and the slower rising long moving average, currently 1339. There were no other weekly key reversals seen in the other freight indexes that I follow. As always, I'm happy to answer any direct questions with anyone who is interested, and with that, I'll finish this section from London, and I hope that you found these comments useful.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Topic and ADM Investor Services International Limited. And here comes the final important bit.